Hello traders, it's Samurai Trader here. Welcome to this training session, how to day trade any market, the $1,000 a day challenge. So in today's session I'm going to be reviewing a number of live trades I've taken, plus from a few days ago, plus I just fired off a couple of trades a few minutes ago, which I will show you. Now of course you can apply these strategies to any market, whether it be Forex, futures, stocks. This is, my goodness, it's not session 102. In fact, I think we're up to let me get this right here. I think this is session 107. So let me just mark that up and just make sure that I've got the right PowerPoint. Just a sec, I'll just check that. So yes traders, it is the right PowerPoint. As always, my videos are raw, real and unedited. So if you look, your goal may not be $1,000 a day. It could be less, it could be more. You're just going to trade less contracts or more contracts. Now in today's video on the NQ, I was trading 5 contracts. On the Russell, which you'll see a couple of live trades I just took, I was trading 10 contracts. Why the difference, by the way? I need a larger amount of money to trade the NQ. Okay, I'm trading a higher time frame, but we'll see more of that in a moment. As always, I do need to get the disclaimer out the way. There is a risk in trading. Don't trade with money that you can't afford to lose. Stay in the simulator until you're consistently profitable, and of course you can pause the video to read the disclaimer. Just a very quick advertisement: if you haven't already downloaded my free ebook, The Truth About Day Trading, there's a description link below. Better still, make sure you subscribe to my YouTube channel. That way, well, I shouldn't say better still, but make sure you also subscribe to my channel so you'll be kept up to date. Better still, become a member. Everything I'm showing you here today, traders, for $197, you get all of my indicators. There's over 200 hours of online training. There's with 38 PowerPoints. There's nothing else like it out there. And of course you don't have to join. You may just want to improve what you're already doing. But if you want to truly master the art of day trading in the fastest possible time, traders, I've been trading now for 28 years, and I also have a bonus where for included within the 197, you can also attend 8 of my live coaching sessions. So every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. I also run live coaching sessions. Now after that, if you wish to subscribe, you drop me an email, then you can continue those sessions for $97 a month. Normally if you go to my website, it's $297 a month. So $197, you get the works. Now before you say or even switch off, you got to watch this, because I'm going to show you some really cool stuff in today's session. And perhaps I should have said that right at the outset. Now first of all, if you're new to trading, you've got to remember what we call the Goldilocks rule. Down here, not too easy, not too hard, just right. So I'll be showing you a number of different trade setups, but initially you start off by trading with the trend. Become a trend trader. Now what's absolutely critical, traders, is that you have goals when it comes to trading, because when the why is big enough, the how will appear. So let me ask you a question: would $1,000 a day or $5,000 a week change your life? That is the true potential. The potential. I can't make promises because I don't know whether you're going to follow my trading rules, but that's a true potential. And as you become better experienced, you can step up the amount of money you wish to make. Now you'll hear me talk a lot about, for an example here, trading 10 contracts, netting $100 a day, which is $1,000 a day. Here on the market I'm trading, which we're doing the main review on, I was after $300 a day per contract. So literally you can create your own ATM machine with experience, but you'll see more of that, because I want to show you a couple of live trades I've just taken, and I want to show you what the market is doing right now. So you can see there's no fluke in what I'm showing you, that the conditions that I trade, we get basically 23 hours a day. Now we do have quiet times in that period. It's just a matter of sitting back, but I love trading the after hours market, what we call the Globex session. Now here I've just taken a snapshot just out of an Excel spreadsheet that I share with members. That is, today we're going to be looking at the 8-tick NQ, and I recommend that members, if they trade that, they have a $7,000 account. Now you say, Ray, I don't have $7,000. That's okay. You start on the micro where you only need around $700 and you build your account from there. I'll show you how quickly you can do that. And that's the thing, traders. So many traders try to circumvent what it really takes to master the art of day trading, and they wonder why they never make it. And they're the ones that'll write the review and say the strategies don't work and all that sort of thing. You know what? That's up to them. Look, if you break the rules, you're not going to make it. That's the bottom line, because I'm going to show you some mechanical trading rules that are very, very high probability as long as you follow the money management rules that go with it. So what we're going to be reviewing today, and I want to try to keep this under around 30 minutes, is here on the 8-tick. Took 5 trades, 3 wins, 2 break-evens, basically $3,100 in 10 minutes. Now this particular day, and this was at 2 a.m. Central Standard Time, this was last week, the market was really moving. Okay, so a couple of days ago, and so the market was really pumping away. So if the market's really fast, this is where then I will increase the time frame that I'm trading. In fact, if I pull this up, you can basically trade, as I mentioned, 23 hours a day, and if you're trading Forex, basically 24 hours a day, 5 days a week. Now I've removed my anchor chart 1 and anchor chart 2 time frames because I've actually discovered a formula which, as I'll show you how effective this is in mastering bounces, where the market's going to bounce. So I've removed those because become a member, and of course you'll learn those. Now down here we're going to be looking at the 8-4, but if that's too fast, you increase the time frame, but that also means you need a larger account. Now if you don't have a really large account, you just decrease the amount of micros you trade, or trade more micros. But I teach you how to do all of this. So on the Russell, for an example, today I'll show you the 3-1. That's a 3-tick Renko and an 8-tick. Now a Renko chart's just a type of chart. You can apply what I teach you here to time-based charts, to tick, to Renko, to range. It doesn't, well, I do say it does matter, because Renko, as you're about to see, makes it so much easier. And I started out for many years trading solely on tick charts, so you'll see what I mean when we get to those charts. So during the Globex session, for an example, I'm recording this now at 8:54 p.m. Central Standard Time. Okay, we can usually trade a much lower time frame. See, the market's open, by the way, at 5 p.m. Central Standard Time Sunday in the US. So I'm recording this down under in Australia at the moment, and down under it's 11:53 a.m. so it's 8:54 Monday morning. So there's just you've just got great trading opportunities basically whenever. So we had on this day, and we go to the charts in a minute, I had 3 wins, 2 break-evens, and the break-even means where I entered plus a couple of ticks to cover my commissions. Now I'm going to also show you this, because while I was just getting a few things ready and I didn't quite get the PowerPoint right, I had the wrong session on there, I just fired off a couple of trades on the RTY on the Russell. Now the Russell is $5 a tick, and you don't have as much volatility as you do on the NQ, but as you're about to see, you get some beautiful patterns set up. So that was all over in 10 minutes as well. 8:48, that's after commissions. Now actually I may as well quickly show you this right now. Yes, let me show you this now. So you can see here I'm recording here Sunday the 28th of July 2024, and if we just skip ahead for a moment just here, so you can see these are the waves. you want to ideally be trading markets that give you these waves. Okay, so you'll see here the trades I just fired off here, and you just get these just beautiful waves using Renko charts. Now what I also want to point out here is the EMA bounces you have, but also off pivots, which I'll talk more about in a moment, because there are certain indicators that plot automatically and give you a massive head start in the markets. Like look at this here, okay, slight overshoot, and you would find, I'm going to show you this in a minute, on a higher time frame you're also bouncing off major EMAs. What that does, it gives you what we call a loaded trade. But the point here is, and I know members will be watching this, what were those? Just our standard. Now that was a T3, by the way, that I missed, and that was a T3 as well. Just our classic T10s, that's what they were. Okay, up there, what do we have there? A T19 pivot bounce. Wow, what do we have here? That's a 3B. These are just standard setups. Now each one of these steps, I call these steps, is worth $5 on the Russell. But I just wanted to show you this, that as we're live right now, that I just fired that off, and so there's no fluke in these patterns setting up on a regular basis. So what I want to quickly show you is just quickly talk about money management, because this whole business is really built around psychology, that is staying true to your rules, money management, and high probability rules-based setups. So all of the setups that I teach you are all what I call pattern based. We're looking for a pattern, and as humans we're very good at learning patterns and identifying patterns. So here, if you don't have the $6,000, you start off here on the micro with $600, okay, and you then build your account. And looking at this, yes, I have used the wrong PowerPoint. These are this is I didn't actually do this correctly. I missed this. I've always got so much going on. Anyway, it doesn't matter. I'll show, actually let me show you on this just here. Let me pull this up. My goodness. Okay, what I was going to show you there on the Russell, by the way, if the Russell, what I was just showing you there, it's what we call a 3-1. You'd need a $3,000 account. What's a sensible target to go for? A really sensible, no ridiculous, yep, you've got to be trading 20 years before you get there. 150 a day, okay, on that. Now that is what we call 30 ticks. Now if you started off with that, and down here you average 150, look where you are in 10 weeks. Let me get, well, 10 weeks you're basically at around your 5,000 a week potentially, and 14 weeks you're up there with your 10 grand a week. And how this table works, and by the way, you can click on the link below and get hold of this table and a little training video how to use this correctly, is that you only start trading an additional contract each time you double your money. Okay, so that's really important. Now let me give you the right the document there, or the figures I should have input. And so we should have really had and let me confirm this, nothing like doing this live. Let me just confirm this. The 8, yes, it was 7. Okay, good. All right, let me get these figures right for you. So let me just minimize that there for a minute. So with a $7,000 account, okay, what would be a sensible target? Let me just get this right. Would be 350 a day. Okay, so this is the realistic potential there, trading for 350 a day on a $7,000 account. Let me get this out right. Look where you are in 10 weeks. Now I'll show you in a moment the trades we need to be taking to do that. And so what is critical is, once again, getting back to, we never ever risk any more than 2%. As you build your account, you want to drop that down to 1% risk. Once again, money management, money management, money management. So we're now at the charts, and actually before we do that, let me just see if there's anything else. Yes, there's something else I want to show you just here. and that was on a 6 tick. I remember another video I did, session 106 I think it was, where I recorded a session on trading the 6 tick. And by the way, why, once again, why the difference in the time frames? The speed of market. You don't want to be trading a market that's going crazy. That's where I want to sit on the sidelines. I want to trade a market where I can get my trades placed. I can manage the trade. I actually call the open of the New York session the killing field. Why? Because it's pumping that quickly. It's not for me. I like to be strategic, like to be able to take the time in placing the trade. But here's what's critical, and here are the key things that I'm looking for, and we'll see on the charts in a moment. I want to know where my floor pivots are, and the cam pivots are. These are and all of these are indicators you can get for basically any trading or charting platform. There's no need to spend a huge amount of money or any money on indicators. You can get them free. Just about, some of the world's best indicators are absolutely free. It's how you use those and maybe how you tweak the settings that's probably important. Where the prior days open, high, low and close, your major EMAs, you'll see in a moment how important they are. Your intraday swing highs and lows, that's the ebbs and flows intraday, because they make excellent targets. And then the current days high, open, high and low. So let's have a look at this on the charts themselves. So first of all, here's a chart where I place the trades there, and so we can see down here, and let me just pause that. There we go. I just set up the NQ on another platform, on another chart, so we can have a look at that as well and just see where price action is right now. Now what we're looking at here is we can see my EMAs have rolled over. If you're a new trader or perhaps a struggling trader, trading hasn't been good to you, forget your counter trend trading. Trade with the trend only. You've got to have what I call the non-negotiables. Now I missed this particular trade just here, and I jumped in here, little slingshot type setup. Thank you very much. So that was a trend following trade. We then had what I call a T12. I want to show you what a T12 is, because we get these every day, day in, day out. So a T12 is where on my entry chart I've got what I call an overshoot. I've got this sort of thing. I'm below my major EMAs, and yet I'm bouncing off major EMAs on my anchor chart. And that's where I said I've cracked a little bit of a code, a secret, which I removed the anchor chart 1 and 2 time frames, which coincide where we get these major EMA bounces, and these become what I call loaded trades. Now this is on a recording. You might say this is okay, just a fluke, this one. You'll see we'll go to where price action is in a moment, and we'll see if we've got any of these have appeared there at that time. Now as we then pull back, and let me just do this, as we pull back here, I've then got another setup, trend following, thank you very much. Okay, and then I had another one. Now in this particular case, in 2 cases here, I went to break even automatically. And the reason for this, on my trading dome, once I hit a certain target, it takes me to break even. That's my entry price plus 3 ticks per contract. And the whole idea is that once I'm so much into a trade, I go to where I enter the trade, cover my commissions and maybe a little bit of profit. The unfortunate part of that at times is sometimes it can hit your target, pull back, stop you out, and then continue. And that's what happened twice in a row. But you know what? That's okay with me, because I know that the probabilities are on my side. You see, in day trading there's no certainties, there's only probabilities, and this is where traders have got to start to learn to think in probabilities. The individual trade, like trades 3 and 4, mean nothing when we look at 20 trades where you're following your rules. So that was a nice win, and so that was a nice short. Now believe it or not, that was actually a trend following trade. This is a trend following, so was that, so was that, so was that. Well, that doesn't look like a trend following, but it was on a higher time frame. See, the way I like to look at it is your higher time frames are basically the tide. We want to be waiting, riding those waves in the direction of the tide. So then I had another one just here. Thank you very much. We hit our target, and I then wrapped that up. So that was on 5 lots only, all within 10 minutes. Now that was very fast. If you're a newer trader, you would probably take less trades and maybe even increase the time frame. And we can see here straight after there was still some beautiful trades, and you can see just there pivot bounce. We rally up there. Here's basically another bounce. So pivots are very, very important, traders, and they plot automatically. So pivots become what I call price magnets. Now if we now have a look at what's happening now on the market, okay, so if we just look at this, remember I just mentioned about bouncing off major EMAs. So just there we're bouncing, just here we're bouncing, then we form a nice little double bottom just there. In fact, if I had have taken that double bottom, I would have been stopped out of that. I've got a double bottom, I had divergence, but it was against me. Now look what's happening here with my major EMAs. They've rolled over. However, there was a beautiful bounce just there. There was what I call a T10. Two of the trades, we'll go back to that in a moment, I took on the RTY. Here was a pivot bounce again. Here is another T12, T12, T12. You 34Bs. Now notice here we're bouncing off our pivots. Here is a bounce off the cam pivot. Look at the divergence. So for those that like divergence trading, you can see it right there. Then we come down and we get a bounce again. Is that the spot I got stopped out of? Yes. Well, if I was trading that point just there. Now the market's just slowed down. Now this is what we call the danger zone. When you see your major EMAs going sideways looking like spaghetti, this is a time when you just want to really be sitting on your hands. How do we know when to then start to trade again when you've got these zones? When you get a breakout, I'm looking for what I call a breakout pullback. I want to break out of that zone, pull up higher, okay, like we just had a potential trade just there. Now another reason you want to know where your pivots are, and just go back, and there's a quick reminder back on this PowerPoint here, check regularly where all of these levels are. Why? They are what we call price magnets and support resistance levels. Professional traders, we trade into those levels. So let's just say if you'd have taken this trade here, this is actually called a 3B. You'd be expecting, now you may not get it, but you expect to bounce up there off your pivot level. You don't always get it. So say if you'd have taken this trade here and you're very close to that pivot, what I recommend is you go to break even or lock some profit in anticipation that you may bounce. It's very simple rules-based rules that you use. Now where's that, just to pull this back down again and show you this just here. So let's just expand that again. So that was the RTY we were looking at the 8 tick. Now this time of day, normally we're not trading the 8 tick. Normally we're trading the 4 tick. So the markets are really pumping. It's been very high volume last week. Saw a big fall off. Tesla profits were down. But see what we've got just here. I want you to remember, traders, that flat major EMAs are evil. Okay, you want to be very careful whenever you have a flat 200 EMA, because you can just chop around, and that's what we call a trading range. Now how do we then identify when we might be going into one of those zones? See this here. What have I got right here? Waves. We've got waves in the market, nice big moves. Okay, these are nice big waves. Now you can see here we bounce off the pivot. Thank you very much. And just to point out the T3, you had a T3. Let me just confirm that, just at 91. So so you had a T3 there as well. A T3 is a very high probability reversal trade. Okay, and it's a great scalping opportunity. So you had one there, had one there. Now these are your T3s, are the only variants. I was going to say they're 100% mechanical in their approach, rules based. The only time, I've just got the same market on another screen, I'm just watching what's happening right now. The only time where you won't take them, a T3, is number one, if you're a brand new trader, there's still a divergence trade, a reversal trade, sorry, so you don't take them initially, or in a very fast moving market. Okay, so you'll get T3s, but then quite often price will pull down, then it will take off again. So do you have waves in the market? But see how then we pulled back here, and I mentioned that was a T3. You've got this here. Now just so you get everything into context here, you look at this if you're a brand new trader. So your entry there would say be at 91. If you had ridden that up to the pivot, that's at 92.8. That's 18 ticks. That's a $90 move in that move. Now how much a day did I mention that ideally you want to be going for that market? Now normally this time of day we'd be trading the 2 tick. Here I've got the 3 tick Renko just because the market's has been quite fast. So that means then you need a larger account. Now remember, 150 a day here, financially free. I also teach what I call the power of quitting. So you'll see with all of those examples I've given you, over and done with within an hour. So the power of quitting is you hit your target and you stop. Now the young guns may choose to keep trading. Okay, they're quite happy to sit there at maybe 5 or 6 hours a day at the screen, and of course they may make a great deal more money. However, for us, I don't want to say old dogs, us guys perhaps in our 60s, perhaps want lifestyle, we might want to exit and wrap up our trading in a shorter period of time as we can. So traders, look, I've covered a lot here with you. This truly is not rocket science. It's about being patient. It's about discipline, getting the right education, applying the right money management. And the beauty of this now is that if you don't have 2, 5, 10, 20,000, or even if you do, you start on the micros, and you can get going with a micro contract with as little as $300, and you build your account from there, and it's 10, 12, 15 weeks and you're there. But I do want to say one thing with that too. Before you even start trading a live micro, you've got to master it on the simulator. That may take you 10 weeks, 5 weeks. You see, I want to be direct with you. You've got to put the effort in. I mean, the only place in the world where success comes before work is in the dictionary. It's not rocket science. You got to learn the patterns. None of this is rocket science. Okay, have I pulled back? Do I have what's happening on my stochastics here? Have I got a deep pullback? Do I have a pivot bounce? All rules-based stuff, not rocket science, but you still got to put some time in. So traders, why don't you come and join me? As well as that, no long-term commitments, 197. You get all of my tools, all of the videos. You can attend 8 sessions, and if you're unable to attend the live coaching sessions, you can watch the recordings anyway. Then after that, if you wish, you can then sign up and attend the monthly sessions. If you're looking for a change in career, if you're looking to increase your income, part-time or full-time, there's no better way of doing it than as a trader. You can also maintain your job. You get home at 6 p.m. at night, you can start trading at 7 p.m. for a couple of hours. Anyway, this is now gone 30 minutes. So traders, I'll see you hopefully in my coaching sessions and or in my next video. Thanks, traders.